All right, let's kick this off. The contents of this material are for informational purposes only and do not constitute investment advice. Blue Sky Binary assumes no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Binary options trading may not be suitable for all investors as it carries a very high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in binary options, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and binary options trading, and seek advice from an independent financial advisor if you have any doubts. The agenda for today is to give you a quick intro on what the Hive is, for those of you that are very new to it. Then we will run through the performance of Signal Hive to date. I will then spend some time decomposing performance. I think this is quite a new way of looking at things, and it's also very important that you understand more than ITM what's kind of happening in the background. And then we will get into key tips that we're going to be giving you that you can use to actually beat the signals in the Hive, generate better ITM than the traders in the Hive, and ultimately grow your capital safely. And to that end also, I will be giving some money management advice and some special types of money management routines that you can use to augment your returns in the Hive. I will also discuss compatibility with brokers, which I think is an issue that is cropping up as the Hive is growing. And then last but not least, I will discuss the future in terms of what awaits, what's coming out of our engineering deck, and we'll end with a short Q&A. If I have not been able to address anything, feel free to ask all your questions and raise your concerns here. So what is Signal Hive? We are a transparent binary options and FX signals marketplace where qualified robots and vetted senior traders post their trades. You, the user, determine which signal streams to follow or simply ignore. Around 120 signals are fired every week, or at a rate of 1 per hour, across a range of expiries. The Hive also has a very in-depth analytics section. It monitors all signal streams and outcomes in near real time and updates it in a big data section where you, the user, can run historical studies to see on which currency pairs or assets at which times of day which signal stream is performing the best or worst. And this is continuously updated through time as well. And last but not least, I think what also makes the Hive quite unique relative to other signal services is that we have an open and transparent community where you can initiate or follow conversations with senior traders or other members in the Hive chat plugin. So this is an interesting chart. This is the performance since June 1st. Recall June 1st, 2015 is when Hive launched. We have been live for about 17 weeks now. And in total, 2,165 signals have been fired on the Hive. This includes robots and humans, and the split is roughly equal in terms of each contributing 50% to that volume. And the overall ITM for Signal Hive is 65.3% as of now. And what you see here, if you can see my mouse pointer at the beginning, is that Hive has experienced waves of performance, right? Nothing moves in a straight line. That would be in an ideal world where Hive is consistently 66 or 65% ITM. But of course, it has great weeks followed by weak weeks. However, what is interesting to note is I've plotted a line here which shows the break even. Okay, and we are going to be saying that 58% is break even, assuming the average payouts that a variety of spot option and tech financials and all the major binary brokerage platforms offer. And anything below 58% is underwater. Okay, so what you'll see in the last 17 weeks is that Hive as a system has been below underwater just once with 56%. All right. It reached break even once at 58% in week 6, but generally speaking, it has been performing or outperforming as it has been delivering weekly profitability week after week. Now let's take a look at the breakdown of performance by signal stream. Here are the robotic signals at the top, and at the bottom are the human signals. As things stand right now, after 220 signals, the best robotic stream is core. Okay, and this is based on the core theory that we teach in the BSB Trader University as well. And this is, of course, the manifestation or the implementation of core as a signal stream, and it's about 70%, 69.5 to be precise. This is followed by turbo, which has come under some fire in the last 4 weeks. It had a tough September. As some of you saw, the replication, the auto trading of this took a hit over at Signal Push. The underlying stream is at 66.3% overall since launch, however, with 409 signals. So it's the most voluminous signal stream. It's a 5-minute signal as well. Dive is somewhat more stable, although the ITM, the lifetime ITM, is lower than the turbo. It's at 63.6% with 154 signals fired. And then you have Curve and Extreme, which are the laggards at this moment, although Curve had a fantastic month with close to 67 or 68% last month. But generally speaking, these two streams have been underperforming, and this is their respective volume contribution. So you can rest assured that our engineers are very aware of this, and we are working on improving this, both on the variance and volume and ITM side as well. In terms of the human signals, Mr. Saki, who was added last week, obviously his performance was backdated and added through time as well, as if he had been performing since June 1st. And you can see here that he's fired since then 252 signals, and he's at the moment the best human trader with 76% ITM. Followed by Joker, who gives 10-minute expiry signals, and again, he is performing or outperforming expectations with 73% ITM and 118 signals, followed by Alpha, who gives end-of-day trades with 71.4% and 112 signals, and then followed by the Turbo Trader Key with 71.3% and 167 signals. Now, mind you, the Key's performance took a hit last month after a few months of consecutive profitability. This last month was underwater, and this was very much in line with our turbo stream, which also took a hit last month. So short-term expiries, mean reversion trades, turbos have taken a hit across the board owing to market conditions. And if you go further below that, then we have Tiki, the trader who trades the Asian session, and that is at 63%, but with a very high amount of volume. And then you have the Opportunist, a relatively new trader who's just above water with 61.2% and 67. The weakest signal across robots and humans at the moment is El Rey with 49.2% and 132 signal count. Now, it's very important that we spend a little bit of time decomposing returns. It's very normal at first when you're new to the industry to go by ITM, the ITM or in the money rate, also known as the win rate percentage. The win rate percentage is simply the total number of wins divided by the total number of trades taken, multiplied by 100, and you get your percentage. So, for example, if a signal provider gives you 100 trades in a month and they have 66 wins, that has an ITM of 66%, or in other words, 2 out of 3 trades are winning. There are two very big flaws with looking at ITM, or just at ITM. Firstly, it does not take into account volume, right? That's the obvious flaw. I mean, for example, if there's a trader who says, I'm 85% ITM, the next question is, okay, what is your volume? Are you 85% across 20 signals per week, or are you giving 1 signal or 2 signals a month? Because the latter is unactionable from the perspective of the client, i.e. you. And the former is incredible, a trader with 85%, 20 signals a week. So volume is not taken into account in the ITM calculation. But a bigger flaw with ITM is variance, okay? Variance in returns or variance in outcomes. And I'm going to go through this next. So let's take 2 traders. The first trader is known as Binary Pro, okay? It's a fictitious trader. It does not exist. And This person has generated 100 signals in the last month at 66% ITM. Okay, but his variance is high. And what that means is that if his mean return or the average return is 66% ITM, but the variance is high, this means that in 1 week he's at 35% and another week at 77%. And you have a very pronounced variance curve or an ITM curve. Okay. This causes a lot of turbulence for clients such as yourself. The more pronounced the ITM curve, the more variance it has, and the more unsmooth the journey is going to be. Now, overall, if you are able to take all his trades, the days that he's doing great and the days that he's doing bad, you'll still generate 66% ITM. But it'll be a very painful ride. All right. Now look at trader 2. Let's decompose his returns. He calls himself binary guru, again fictitious. 100 signals, same volume count, and again the same level of ITM, 66%, but the variance is dramatically lower on this specific signal stream. The variance is basically just the signature, okay, of risk. So what you see here is that in a down week, this trader is at 62% ITM, and in an up week, he's at 67. And again, down and then up, and it's very constricted, the ups and downs, right? Now, this specific trader doesn't necessarily reach the highs, the ones that get people excited, the 80%, 80%, 80%, but he also doesn't reach the lows. So he has a very constricted outcome zone, right? And this is a much more palatable journey for you, the manual traders of Signal Hive. Now, the reason I'm telling you all of this, again, I apologize if all of you already know this, but based on the questions that we're getting in the rooms, it's become quite clear to me that a lot of you do not know the concept of variance. So next time you are presented with a trader that tells you they're 80% ITM, the question you need to ask is, what is your volume and variance adjusted ITM? You don't care about vanilla ITM. That's nonsense. That's just bad maths. You want to know the volume and the variance. And this is what we engineers are doing all the time in the background in order to improve the Hive's variance curve. All right. So there's a lot of stuff going on in the background that you do not see, but what you do see are the results. So what you will see is that when we started Signal Hive around 4 months ago, 4 or 5 months ago, 17, 18 weeks ago, you will see some pretty pronounced variance, right? Right up to 74%, all the way down to 58%, even 56% was our low. And this is the system as a whole. So this is basically the aggregate amount of trades given by all signal providers on a weekly basis and the aggregate ITM, okay? These are win rates. These are average win rates for the system as a whole on a week. Now, mind you, in the first 8 to 10 weeks, you had some pretty wild gyrations, right? So you'll have days of seas of red followed by seas of green. And this was a high variance system. Because of the engineering we've been doing, and because on the side of the humans, which require no engineering, they just require better risk management practices, and I'm talking about our senior traders, notice the dramatic drop in variance in the last few weeks, and which has actually been traditionally a very tough period, the summer trading period, right? We have managed to constrict that curve, that variance curve, dramatically. And you're still getting some pretty powerful outcomes. Hive reaches close to 70%, but it's just not also having those very, very poor weeks as well. And we want to stay within this range. The ideal outcome is a completely flat variance curve, right? Hive is weekly 66%. Now that's going to require a dramatic shift in our algorithms, in our stabilizers, in our entire rethinking of the markets, right? But we're working on it. Whether we get there, that remains to be seen. But we're certainly working on reducing this volatility that you see in returns, also known as the variance, so that the journey is smoother for you. Okay. And what we would now classify Hive is dramatically different from what we would have done, let's say, 3 months ago, where it was a high variance system. Now it's a medium variance system. And hopefully in the long run, it will become a low variance system. Let's discuss tips and tricks on how you can actually outperform the Hive. Okay. There are two tips, and please listen very carefully to these tips. The first tip is just wait. Okay, and I'm not asking you to wait for our engineers to make the Hive lower risk. That wouldn't be fair of me to do that. What I mean is, when a signal fires, just wait to get a better price by at least 5 pips. Okay? Now, we did a study last month. We got one of our interns to do an interesting study. BSB Mike, also known as Tiki, has been facing some rough weather in his Asian session. Overall, he's profitable, but he has some bad days followed by really good days, right? So he is exhibiting a variance profile similar to the high risk trader that I showed you earlier. Now, this study basically was eye-opening. We back-tested Mike's signals that he gives on the Hive, and we waited for 5 pips, right? We looked at each and every signal he's fired on all pairs in the last few months. And we waited for just 5 pips better price. So if he fired a call or a long signal on Euro US dollar at 1.1200, we simply waited for 1.195 or what have you. So 5 pip better price. Okay. And we did this for all signals. And here's what we found out. His ITM improved by a whopping 7 percentage points, right? This isn't 1 or 2 percentage points. This is a dramatic shift. This is a structural shift in ITM. So he went from 55% in a bad month close to 62, or actually slightly a bit higher. So it's like, it means the difference between losing and winning, basically, right? That's 7 percentage points. Now, of course, there was a drop in volumes because if you are going to be waiting for a 5 pip better price, there's a chance that the signal might simply never get to that price and you lose out the opportunity. And that's actually not a bad thing. I want to reiterate that you are not here to get rich in 3 days or get rich in 2 weeks. If you are genuinely seeing this as a long-term capital growth story, which is what all professional traders and investors do, and you are not a fly-by-night operator, then I would suggest that you let those signals pass. And what we noticed is that there was a 40%, 35 to 40% drop in volumes simply by waiting for a better price on Mike signals. So instead of 3 signals per day that Mike normally gives, you'd only get 2. But those 2 that you would get would be at a 5 pips better price, if that makes sense, right? So there is no harm in missing out 1 or 2 good signals that, oh, you didn't get on the bandwagon early, so you lost out, right? There's no harm because the mathematics points to the fact that it doesn't matter. Overall, you're going to make more money because the signals that you do take are just at a better price and have a higher probability of winning. The second fact that you have going for you here is that, let me remind you again, Hive fires over 120 signals a week, right? So it's not like this is the last signal that's ever going to be fired on Hive. If you miss one, there's going to be 1 tomorrow or 2 tomorrow or maybe a few hours down the line. So again, I'd like to stress that every time a signal fires, avoid the urge to get excited and get on board ASAP no matter what the price is, and certainly never ever get on a worse price than the one that you see in Hive. The second tip is variance mapping. Now this sounds more sexy and technical than it really is. Basically, what we're telling you here is to take a look at the previous week. How did the Hive do? And where is it on its ITM variance curve? What I just showed you. Okay, I'm going to go back in a second. If Hive is at a low, at a historical low, you can increase the risk next week and reduce risk if Hive is at a high. What do I mean by this? Let me show you. So what you'll notice here is that every time Hive peaks, there's a trough next week. Every time it peaks at around 70%, there's a trough next week. And this process continues. What we're saying is, ask us, go and click on analytics. You should be seeing this information there and find out where Hive is last week, right? So if it was at 60%, it's probably likely that the week after that or the next 1 or 2 weeks after that, you're going to get super normal performance. And if it's peaked out at 69 or 70%, you probably want to reduce your risk in the coming week because Hive simply is not going to go from 69 to 69 to 70 to 80%, right? The Hive is just not good enough to get to that level structurally at the moment. What's probably going to happen is it's going to bounce around within its long-term variance range, right? And you can play that variance range. The information is right here. So again, either you wait, which is the easier thing to do, or engage in variance mapping. Let's discuss some money management. So a safe thing to do is to compound. What I mean by that is take trades as a fixed percentage of your total binary or FX portfolio. Okay, we would suggest no more than 1% should be allocated for any signal. On larger accounts, for those of you that have a few $1,000s, absolutely this figure should be even smaller, right? So this is important. The reason compounding is important is that it accelerates exponentially. Please listen to what I'm saying now. It accelerates exponentially your absolute dollar return on your capital as your account grows. But the beauty about compounding is that it also decelerates at a decreasing rate your dollar risk or your dollar losses as your total account drops. If you keep a fixed percentage, that's the beauty about compounding. Risk on the way down becomes marginally smaller and smaller and smaller. And as you grow your account, the risk does not increase, right? So that's compounding. The other way to do this is fixed dollar sizes when you have smaller accounts. Let's say you have a $200-300 account, stick to $10 trades, take fixed dollar trades so that your overall percentage of account at risk per trade keeps declining through time. And this is assuming your account is growing, right? The third, more risky technique is systemic martingale. And this is very different to classic plain vanilla martingaling. That's something we would never ever encourage. Not a single senior trader in Blue Sky Binary or on Hive is engaging in martingaling or anything like that. But what systemic martingaling, and try this on demo first, is basically spreading the risk of incrementally larger dollar trade allocations over multiple signal providers in the Hive, right? As opposed to martingaling on one particular trade sequence. And what that means in English is if you have a euro US dollar signal that's being just fired, right? Let's say Core fired a euro US dollar call with a 10-minute expiry, and it starts to move against you. You enter your first trade at $25, it starts to move against you, and you double up your position for whatever reason, which we would never advise, and you're now at $50 allocated, right? So in total, 75 at risk, and it moves against you, and it starts to move against you, and you start throwing more money at this sequence. There is a probability that the euro US dollar, given how liquid the currency is just going to drop another 15 pips, and you're going to wipe your account. That's possible. That's the inherent drawback. Mathematically, martingaling does not work in the long term. And we have some members here who have done the mathematical rigor and analysis and calculation behind it, and we can show you that martingaling does not work in the long run, unless you have an infinite amount of capital in your portfolio. However, systemic martingale is smarter. What I'm doing here is, let's go back to that signal that fired euro US dollar call, right? It fired, and I took a $25 trade, and it lost. Done. What I'll do then basically is, let's say the next signal fired was from the Joker, right? And I put $30 on that trade, or $32, okay? And if that lost, then I'm looking at the next signal stream. And I do this until I actually win, right? And I will be raising my amount such that when I win the next signal, it's making up for the previous losses. Now, the thing about systemic martingale is there are two things to note here. Firstly, you're spreading the risk over multi systems, not just one system. And that's dramatically lower risk as a result, because the likelihood in Hive to have 6 or 7 consecutive losses across different signal providers is very, very low. It's literally under 1%, right? So that's one thing to note. That's a very, very smarter way of martingaling. The second thing to note is you still have to have an absolute stop loss in a systemic martingale. You cannot, because there is a risk statistically that Hive will have 10 losses. And what you don't want to be at the wrong end of that stick when that happens. So you need to have a systemic martingale hard stop at, let's say, 4, right? Or 5. You start with $10, you go to 25, you go to 50, 60. And if you have a $1,000 account, you can maybe wager up to $80 or $100 using systemic martingale, but no more. That's very important. Systemic martingale is not open-ended. You cannot go to 10 losses or 12 losses. Now, we still have to do research on systemic martingale, how it looks, how it works. Some backtests show that it's very powerful on particular streams, but I think the jury is still out on this. If it were up to me, I would just avoid any type of martingale and just stick to compounding. And that is what I do in my own trading account, by the way. So waiting for better signal prices, and compounding is a more safe strategy. Now let's discuss broker compatibility. So here's one thing to note is that Signal Hive is firing a lot of signals, and sometimes the pairs that it fires on are not commercial, right? I mean, you'll get a Euro Turkish lira trade, and I don't know any broker that has Euro Turkish lira. I know one or two, but it's very rare. Or some of our Japanese signal providers may provide signals on NZD/JPY at 10 in the night when one of our brokers is already shut, or most European brokerages are shut, but their Japanese binary option brokers are open, or they've taken the signal as an FX trade. And the FX market doesn't sleep. You can buy and sell currencies, any currency at any time. You just have to pay a higher spread. So the point here is not to attack the signal provider or us, Signal Hive, and say, oh, well, why are you firing signals on the wrong pairs? That's irrelevant. We are algorithmic, right? You need to be smarter than that. And what you need to do, for example, is if a particular pair on which a signal has fired is not available, either don't trade it. Again, this goes back to what I told you, that there always will be more signals in Hive and on pairs that you do have. So there's no need to get frustrated and say, oh, I have to trade this pair. Either just don't trade it, or trade a correlated pair. Now, correlation trading is normally risky if you're doubling up your positions, but in this case, it's actually smart. For example, if a signal is fired on an exotic pair, such as New Zealand dollar, Japanese yen, right, at let's say 10 p.m. GMT in the night, you're probably not going to have that on your broker. I certainly don't. But you can look to reduce your dollar trade size because okay, now I'm going to be trading correlated, so there's higher risk of me taking the signal. So instead of taking a $25 signal, I'll take a $15 signal, and I'll trade the New Zealand dollar USD instead. Now this pair is widely available on many brokerages, almost 24/7. And if your binary broker doesn't have these basic pairs and has really wonky expiries, then change your broker, right? This is not what Hive is not in the business of advising you which broker to deposit in, and we are absolutely uninterested if your broker has the expiries or not. It's irrelevant to us. The goal is basically adapt the signals to your brokerage expiries or change your broker. So, for example, NZD/JPY, a correlated trade would be NZD/USD. All right. Let's talk about expiry mismatches. So if a particular pair on which a signal fired is not matching the expiry available on your broker, either don't trade it, which is what I do, I just don't trade it, or trade the nearest available expiry, albeit with a lower trade allocation, so you reduce your risk, right? So if a turbo has fired, let's say, and you don't have a 5-minute turbo panel for some reason. I wouldn't know why you wouldn't have that in this day and age, but let's say you don't have a 5-minute expiry, you only have a 10-minute expiry. Go for it. Take the trade, right? Take a look at the chart. If you see the exhaustion lasting, take the trade. Just reduce your risk by 50%. Take a much smaller trade. If, for example, the expiry is at end of hour and for some weird reason your next expiry is 10 minutes past the hour, take it. That's all I'm saying, or avoid it. But ultimately, the signals have been engineered in such a way that they don't win by micro pips, they win by a relatively decent margin. And if something is end of hour, it should also work on a 5 minutes later or 10 minutes later. Yeah, so that's one thing worth considering as well. But again, when you are stepping in the territory of correlated trading, because you don't have a pair available, or expiry mismatch, so you're taking a longer expiry, just reduce the risk per trade. So that's out of the way. Let's discuss the future for those of you that will be around in the Hive in the longer term. As I've highlighted to you very clearly today, hopefully, our primary goal is to reduce variance to as low as humanly or technically possible in Hive as a system. Okay, in order to make the signal taking journey as consistent week in, week out, and of course, one that is profitable for you. Okay, so our goal is to compress that ITM variance curve dramatically. With respect to the additions of new signal streams, so recently we added Mr. Saki, who's had a decent start. I think he's at 85% ITM in the last 2 weeks, over 35 signals fired. That's what we like to see. And some pretty good risk mitigation there as well. I saw no signals firing during the non-farm payrolls. But there are more streams that are coming, so we want you to be prepared for that. Currently, we're in the process of adding our first artificially intelligent signal stream, known as the Vol Pro. This will be followed by the Turbo 2, a significantly improved version of the Turbo 1, which in itself was a powerful signal stream. And then we're adding our first 2-hour signal, which can be used for FX as well, which is known as Fade. And we're currently in the final phases of Mimic, which is a 5 and 10 minute expiry signal that is fired during the actual European trading day. Our goal, apart from the reduction of variance, is to double the amount of signals offered on Hive from about 120 per month to about 250, to maintain the profitability of about 66%, which, by the way, is already extremely high, and also to make our signals that are fired more broad-based across the 24-hour day. For example, a lot of our signals are clustered sort of after 2 p.m. GMT, and then they run till midnight, but not a lot is happening sort of 8 a.m. GMT until 2 p.m. GMT, apart from a few humans that fire 2 or 3 signals then. We want to make sure that our robotic streams are also tackling that traditionally very tricky European session, and that's, of course, part of our goal. And then last but not least, new assets. We are working on expanding Signal Hive into stocks, indices, and commodities. And of course, ensuring that our robotic streams work on those types of assets as well. Okay? That's it. I'll take questions now. I see a question from Peter Sudruk. Is this presentation being recorded? Yes, it is, Peter. This has been recorded. I see a question from Irene Zorob. What do you mean by human signals? Irene, we have in the Hive currently 12 signal streams, of which around 5 are robotic and the rest are provided by senior traders. So they are generated by humans who have auditioned for us, who have been trained partially by us, and when they meet a certain benchmark, they can join the Hive and give signals, and they earn based on subscription revenues and a salary. So we have humans giving signals on Hive and also robots. Any other questions? Peter, the variance graph is going to be viewable in analytics. So we're adding quite a few new functions there. In the meantime, we will be providing you the data, the variance data, on an ad hoc basis. Just ask us for it, and we'll be making that available. The variance graph, I'm glad you asked that question, is key to assessing the true risk of a stream, both for auto trading, but especially for manual signal taking as well. And so we're going to be having a pane in the analytics section known as risk analysis, and you'll be able to plot on a chart across any time frame that you pick, and also time during the day, the variance of any signal stream, both human and robotic, on top of each other to really compare, which trader is the lowest risk, whether robotic or human. So that's definitely in the works. Okay, I see a question from Alexandru Gavil. Hi, I'm a little late to the webinar and I'm asking if there's a copy signal robot available. Alex, are you referring to automatic trading or auto trading of these signals? I see a question from Andre K. What are the expiries going to be for stocks? Great question, Andre. It'll be the same expiries. The view we are taking here is that stocks, because they are not exposed so much to macroeconomic risks and geopolitical risks. Um, they are inherently lower risk assets to trade. And so theoretically, the variance on our signal streams like turbo and all of these will be lower. The ITM may be the same, but they'll just potentially have um, a more safer journey from the perspective of the client taking the signals. Great question, Peter. Will our trades that we enter in the ITM Dari be calculated and represented as a variance graph? That's a good question. So Peter's asking if the ITM Dari that's currently available as part of the BSB Trader University is going to be having the variance analytics, and yes, it will. And to that effect, the ITM Dari is being re-engineered, so it's going to be more electronic. It's not going to be a Google sheet. It's really clunky at the moment. And you'll be able to run all the analysis that you see on the signal streams in Hive, also in the dashboard. And the dashboard, of course, is our trading tool. Okay, I see a question from Alexandru. Yes, auto trading to copy the signal to my platform. Yes, Alexandru, we have an auto trading Hive automatic trading program in place, and we have already launched it. There are about 10 clients that are registered and paying for it, but we are currently not accepting new members, but you can register your interest. Auto trading for us is a non-core, strategic non-core part of our business, and so it is something that we're taking a wait and see approach, and we're launching it very carefully. But you can email support@signalhive.com, and we'll be happy to add you to the wait list. I see a question from Leonid Zorin. Are there perhaps also any future plans for ATP or just gradual addition of more streams? Absolutely, Leonid. So the thing about automatic trading, and you've seen our view on automatic trading in the last 5-6 months evolve. We are obviously dedicating resources to it, and we are growing it, and we're trying to make it safe. Right now, in automatic trading, you're not allowed to trade any of the robotic streams, okay? Because we do not want any crazy events to happen. And when the humans are trading, they pretty much stop after 1 or 2 losses. So it's much more safer to auto trade the humans. And so longer term, we're going to be monitoring all the streams, and the safest ones are going to be drip fed into the ATP funnel, and you'll be able to trade all of those. Ultimately, if we have more brokerages that are signed up by Signal Push and therefore give you a more diversified way to trade our auto trader, then we are also going to be investing more resources. But if there's only one broker that's going to be connected to our streams, then it's not worthwhile for us as a group to invest too much into there. I see a question from Stepan Kalinik. Are there any plans for ladder type trades? Stepan, we have a ladder academy in the Skype groups, and because ladder is continuously being reduced in terms of payouts by spot option brokerages, or at least that's what we've observed, it's not something we believe is going to be a serious instrument in the long run in the binary option space. So at this moment, no, there is no plans for further investment on that front. I see a question from Tole Pitville. You mentioned compounding. At what level should one do it? Daily, weekly, or every moment you trade? Excellent question, Tola. I do it on a bi-weekly basis, so it's not true compounding. In reality, compounding is every single trade, right? So if you took a 5% of account trade on a $100 account and you won it, suddenly you're sitting on $104 because you win only 80%, and then your next trade will be 5% of 104. And so forth and so forth, right? So in theory, it's constant compounding, daily or instantaneous compounding. I'm a bit more lower risk, so I just kind of do it once every 2 weeks. But yeah, that's kind of up to you. I see a question from Francis Obasogi. Is the fade 2-hourly signal going to be a robotic signal? Yes, Francis, it is. It is going to be a 2-hourly signal, and we are just doing some filtering to make sure that it's a 70% signal. Right now, it's about 64%. We want to get it to 70% in back tests before we launch it on the Hive, because now we've upped the bar in Hive. It used to be 60%. Anything at 60% gets in the Hive. Now we've upped it dramatically, just to make sure, because we're not looking for volumes anymore. We're only looking for the best quality signals. So it's going to be a robot, but there's still a bit of testing to go. Any other questions? Yeah, Francis, that's a very good question. So Francis is asking if it can be used for Nadex. Absolutely. Curve can be used for Nadex. Extreme can be used for Nadex. Although their win rates are lower than the other signals, what's interesting is that when they win by quite a large pip margin. And on Nadex, if you look at some of the deep out of the money calls and puts in the spreads, so some of you that are trading the bull spreads or the bear spreads, and I do apologize that we as a group haven't really invested too much time in Nadex and taking BSP to Nadex, but that is, of course, something in 2016 we're going to be doing. But for those of you that are trading the bull or bear spreads in Nadex or the deep OTM calls and puts, you can use the extreme signals there very efficiently. You can use the curve signals. You can use the core signals as well, and of course fade. And some of the human signals as well, like Bart's EODs, right? I mean, when they win, they can win by 40 pips. And for those of you that are not on Nadex, you're almost missing out. So it's good you brought that up, Francis. Any other questions? Last call for questions. Thank you, Peter. Thanks, everybody. So I'm not seeing any more questions. If there are any more, of course, go ahead and email us or ask in Skype or on the dashboard chat or on the Hive chat or anywhere. I wish you a good trading week ahead and good luck.